good company, right?
Yes. And actually, if you do want to talk about trends, I'll put my track record against anyone in the entire financial media, anywhere in the world. And I'm not just saying that because it's when you talk about what's going on economically around the world and even politically, and I know nothing about politics. I mean, it's pretty. You don't need a rocket science degree to see what's going on. And most people just, for whatever reasons, either selfish reasons or they're ignorant or they just don't care or they don't do research because research is a lost art. They just never seem to get it right. But, economically, things are singularly the worst that they've been in my lifetime today. Worse than 2000. The only times they were worse were literally a few weeks in the middle of 2008 crisis when people were in a, deer in headlights type thing, when the markets are crashing and, in the aftermath of 9/11. And I'm talking about, for 2 weeks. That's it. When everyone just stops. Otherwise, in every quantitative measure out there, this is the worst that it's ever been in our lifetimes. And the trend is down. I mean, it's across the board. You look at, the GDP again. These are all these numbers are a gigantic joke. Like, the GDP just came out for first quarter, 0.7. How it's even positive is beyond me because all the important numbers, the hard data, are not only down but rapidly falling. And if you want to use your 0.7, which is now double seasonally adjusted, and even double seasonally adjusted, it's the worst quarter that we've had in like 5 years. And 2016 was the worst year for GDP that we've had in, I think, since 2008. No matter how you slice it, things are getting worse. The retail Armageddon is real, and it's not just because of Amazon.com. Look at yesterday's auto sales that came out for April. Bloodbath was the word on Zero Hedge, and that's coinciding with the record high inventories of cars and the record high subprime loans and leases of cars at record high durations and interest rates that are going to be moving up on them. And that's just the auto sector. And then you have, things, the construction spending is down. The durable goods orders are down. The only things that are up are the defense orders by the government as we go to war. And probably the only thing Trump will get passed is his 10% increase in the world's largest military budget, like bigger than the next 5 countries combined. That'll probably be the only thing that he gets done. And when you talk about precious metals, I mean, look, I'm looking at silver down 28 cents today on yet another day of absolutely all, as I call it, PIMB, precious metal bullish, everything else bearish news. We had a 4 for 4 yesterday in economic data misses, personal spending and construction spending. I mean, just across the board. The problem is that, as I've said for some time, the commercials, as in the cartel, had taken their largest ever short position in silver, which maxed out about 2 weeks ago. Right in the middle, sandwiched between the Syrian attack and sending our warship to North Korea so that we can have a nuclear war there. Right in between there was when it maxed out. And since that time, silver's been taken down now 13 days in a row, which is the longest that it's probably ever been down in the 15 years I've been watching it. But more importantly, I just looked at it from a technical standpoint. The only other 2 times it's been this oversold in the past 5 years, and my data only goes back 5 years, I don't have those advanced charts, are right after the April 2013 alternative currency destruction raid when Obama had his closed door meeting with the too big to fail banks and they smashed prices the next day, and at the ultimate bottom of prices of gold and silver in December of 2015. Oh, sorry, one more time. At the end of 2014, when the Swiss had their gold referendum, and there was a manic effort by the central banks to smash prices down in front of that referendum, so that so people would not want to vote for buying gold. And of course, a week later it surged, and then 2 more weeks later, the Swiss depegged the franc from the euro after having spent the whole fall telling people we need to have this referendum fail so that we can maintain our peg with the euro. So again, we're talking about historic times right now in the precious metal markets due to historic desperation for political matters, economic matters, and hopefully not military matters, because everything is hitting the fan right now. I wrote today yesterday I wrote of how will the biggest bubble in history end, because that's unequivocally where we're at right now. And today I talked, I can't even talk about today. I'm trying to remember what I was talking about today. the topic. Oh, yeah, central bankers with itchy trigger fingers, because right now it's at the point where the only central bank in the world that's not at full force QE is the Fed. And given the massively deflationary nature of what's going on in the world right now, it's only a matter of time before they are forced to by circumstances.
Yeah, well, and the question is, when is that going to happen? So those car sales were pretty bad, and the car sales have been great since for years now. I mean, 17 million units a year they've been selling. So what's good for GM, I guess, is good for America.
Well, we replaced the stock bubble with in the 1990s with the real estate bubble. And when that crashed, we had to have new sources of bubbles created, because that's what the Fed does. It's printed more money, and so have all the other banks of the world, to create more bubbles. So, we've seen selected real estate bubbles, not in every market, but in many markets. And we've also seen the relentless push to find ways to get Americans to borrow as much money as possible. And when you look up 10 years later after the crisis, you realize that in the first quarter of 2017 that we just finished, household debt, which had plunged during the financial crisis, not because people were paying back debt because they were defaulting on it, has officially gotten back to the peak level of debt on a household basis and from credit cards that we were at the beginning of the crisis in early 2008. The thing is that the household debt is now broken up differently, because now that home ownership has collapsed to 2-decade lows because everyone lost their shirt and can't afford houses anymore. And secondarily, because the Fed created an echo bubble so that the venture capitalists can go in and buy up all the houses and make housing even less affordable and drive up rents to, as we speak, the highest level of average rent ever. So, you have less mortgage debt now because less people can afford houses, but you have had people funnel into credit card debt, which has gone to record highs. And the two new big subprime categories, since you don't have enough mortgage demand, or frankly, the banks wouldn't give people mortgages even if people wanted them. The new two big categories are student loans, where we've doubled the amount of student loans since the financial crisis. It's like $1.2 trillion now. And also subprime auto loans. And that includes the leases that don't get included in loans, because now we have a record amount of cars that are financed either by loan or by lease, and at record durations and for record amounts. It's kind of like those housing loans where the car companies are actually and the banks are actually lending out more than the value of the cars to people. And now those markets are, not just anecdotally, they are right in front of our faces crashing. You're seeing exploding delinquencies in auto loans and student loans. And next up, it's going to be credit card debt, because, we've had our zero interest rates all these years, and yet credit card interest rates haven't gone down at all. If anything, they've gone up. They're not at the all-time high yet, but they're pretty close to it. And now that people have record credit card balances, I just read today that the average American has $25,000 of credit card debt. I just read that. Wow. I said it said a huge amount have. Yeah, I think it was like, the top X percent have like $37,000 on average of credit card debt. And that's 20% debt right there. So again, and we haven't talked about the government, which has doubled its debt since the financial crisis and pushed interest rates down to essentially all-time lows, because it's the only way that they can finance it on a day-to-day basis. So where do we stand right now? Let alone with Trump, we have this, remember we had Trumpflation, because Trump's going to come in, not Trump, but just anyone come in and reduce taxes and repeal Obamacare, which in and of itself doesn't change anything from a financial standpoint. You can move around, you can call things that were taxes fees. It's kind of like the Fed does swaps. So when they lend money to European banks, they don't count it as money printing, even though it is money printing. It's just an accounting gimmick. So even if there was a repeal and replace of Obamacare, it would still be the same thing, because what Trump is trying to do is basically have the same thing as Obamacare, just kind of call it something else and shift around the accounting on it so that you can pretend that there's less deficits and push through a tax hike. The problem is he can't get it done. We're at, number 3 was supposed to get voted on today and couldn't get enough votes. So that's not getting done. And then we're supposed to get a tax cut that's based on that. And it's so comical when they say, well, now that there's no Obamacare, we can focus on tax relief. And they said, no, we said in the beginning, you can't have a tax cut without an Obamacare repeal. And we don't have an Obamacare repeal. All we got is a one-page tax cut plan that's it's predicated on things that haven't happened and can't happen and are politically unviable, as I said, from day one in the first place. And then there's this fiscal stimulus, which isn't even, remember the core of Trumpflation, even though the fiscal stimulus he was talking about from the beginning isn't even, it's pennies on the dollar compared to what the Chinese have spent for 10 years.
Yeah.
And to no effect. So again, none of these things are happening. And by the way, you look at the quote Trumpflation trade right now, and what do you know? It's falling apart. Interest rates are plunging. Commodities are plunging. Was there anyone in the entire financial world other than me who was saying that the oil OPEC deal would fail if it was even a deal at all? Well, guess what? It's failing, and they may not even renew it. I think the meeting is a week or two from now.
Yeah.
So we're talking about every aspect of the supposed Trumpflation trade, which, by the way, wasn't even a trade. Until hours after he was elected, going up until it, he was the worst thing in the world for stocks and the best for gold. Until hours after he was elected, where they changed it, said, no, it's Trumpflation now. He's like little Hillary Clinton. He's amazing for stocks and bad for gold. And now we have, as I wrote yesterday in my audio blog, .com-like valuations in a Great Depression era. And every aspect of Trumpflation has fallen apart. Oh, and by the way, we're at war with Syria and probably going to be at war with North Korea soon. And look, all the things that are going on in Europe right now, Greece and France and Italy. I mean, come on, people in France. If you vote for this little pipsqueak Rothschild loser 39-year-old, and has anyone seen the story of his marriage? Oh, my God.
That's a great story. I mean, that is worthy of a movie. I mean, he seduced her when he was like 15 and she was 30-something. 40. Was she 40?
40 with kids older than him, married.
Oh, my God.
Look, and I know in France people don't care about those kind of things, but they should care when it's your president, okay?
Yeah. Well, as long as the French can get a good bottle of Bordeaux and some good cheese and some good food, they really couldn't care less what else is going on in the world. I mean, that's what I've seen. I mean, that's a little extreme, I know, but the French are into the sensual, into the pleasures of life, and they don't seem to care about much more at this point in time.
Well, but they do care, because it was the first time that the two main parties didn't get it to the election. I mean, it would be like if we had an election here and neither a Democrat or Republican was in the running.
In your dreams. In your dreams, Andy. In your dreams. What? In your dreams, it would only be too good.
Right. But the point is, people are angry. I mean, look, I put this chart today.
Yeah.
They asked 18 to 34-year-olds in Europe, would you participate in an uprising against your government? And in almost every pig's nation, and France, the numbers were astronomical. It was 80% in Greece. It was 60+% in France. And then we had the demographics to consider. I was writing about today. I mean, they're so bad that Germany and Italy and Greece are almost up to Japan's level. And Japan is, I just read today, I was writing about it. The Japanese, we talk about the $4.5 trillion Fed balance sheet and how gargantuan it is, right?
Mm-hmm. Yeah.
Did you know that the Japanese balance sheet of the Bank of Japan, I never really followed it because I just look at the trend of it exploding and it's always in yen and I'm not sitting there making calculations. It's $4.5 trillion. They have a third of our population, a quarter of our GDP, and the Bank of Japan's balance sheet, which is only supported by literally a policy of not allowing interest rates to turn positive. I mean, they would say we will not let the 10-year interest rate go above zero. Mm-hmm. Is $4.5 trillion. It's the same as our country, and Abenomics is now 4 years in this month. It was supposed to be 2 years, and they're going stronger than ever. And the ECB now. I mean, I couldn't believe when I saw that Germany's average age is now as old as Japan's, and Greece and Italy. Amazing. So they're going to go through all those same things. So you have basically hyperinflating central banks in Japan and Europe, and obviously you could see why there's this all-out propaganda, anti-Brexit, anti-Trump-like thing going on in Europe to prevent Marine Le Pen from winning. Because if she wins, there's no more ECB, and all those nations, starting with Germany, will collapse into the abyss. I saw yesterday it said Greece, there's white smoke from the meetings. Greece gets another bailout, and I'm going, how is this even possible? Like this was 2 years ago almost, where they voted Oxy and said we don't want a bailout, and they've given them 2 bailout tranches since. And as we speak, you look at the numbers, the Greek GDP is the worst that it's been since 2003. So it's been continually falling. They haven't done any, and I mean any, of the austerity things that they were asked to do to get the funds. and they're projecting their debt to GDP is 180%, and even the IMF is projecting it's going to get to 300% in the next 2 decades. I think it'll be sooner than that.
Yeah,
because the GDP is going to go up, and 80% of the Greek people voted that they would participate in uprising against their government, against Alexis Tsipras, who came in to office under a premise of I won't take any bailouts, and then in bailouts they're taking just enough money to get by for another few months. But I mean, something over there is going to give, and something's going to give in France too. I don't agree that the France that they have a socialist environment that seemingly insulates them, but it's in chaos right now. I mean, their banking system is in trouble. Their unemployment is at a record high. I mean, a record high. It's never been this high. There's a reason why Francois Hollande, who's leaving after one term, isn't even running for presidency again. If French were so happy, then why does their president have the lowest all-time approval rating of any president in French history? And guess who his Treasury Secretary was? It was Emmanuel Macron. That's why I don't believe for a second that there's people in France who want to vote for this guy. I just don't believe.
He's a flake.
I said today, Hillary Clinton is Winston Churchill compared to this guy. He's such a loser. This guy is half of Hillary Clinton's age, guy.
He's the Justin Trudeau of France.
But his father wasn't the prime minister.
I know.
He was born silver spoon, but not to royalty. He was just born silver spoon. He's got put in the Rothschild Bank, and they gave him a few $1 million for nothing. He's done nothing except this crazy relationship with his wife, who has kids older than he does, and he was the Treasury Secretary at age 37 of the most unsuccessful presidency in a collapsing economy. So how am I to believe that the people of France want? He doesn't even have a program. It says that his thing is I rely on the magic and the spirit of the times to guide me. It's like you're 39 years old and you're a big failure in life. What does he have? Who's his fairy godmother? I mean, is George Soros there? I don't know what's going to happen this weekend, but the same odds were given to Donald Trump to win this close to the election, and it just makes no sense to me why anyone would want to vote for this guy. France is probably, of all the major West European nations, in worse shape of all of them, tied with Italy. I guess it's a tie right there.
Well, Italy, Greece, Well,
Italy's Greece is not a major nation.
Well, Spain is major. Spain is major, not as major as Italy. Portugal, obviously not so major, but they're all going down the tubes together. Now, the French attitude is, look, as long as you have a good lunch and you get to take a nap afterwards, life is good. And yeah, I know they're not happy and all that, but they've got choices that they don't want to make, just like everyone else. And when you have a choice that you don't want to make, what do? You go for the devil that you know. But I agree that
the UK voted for the Brexit.
I know.
I mean, they did, and
Unusual.
That was something that was a draconian thing, which has had major ramifications. I mean, the London real estate market has had a dramatic decline since, and they are. It's going to be a lot worse before it gets any better over there as they start to actually Brexit and deal with the European Union. So it is a scary choice that they took. And the same thing goes with Donald Trump. It was guaranteed that he wasn't going to win. And he won.
Well, we knew he was going to win.
It's no different over there. Look, the fact that Marine Le Pen is expected to get 40% of the vote, and she's as fringe as you get. I mean, she makes Trump look mainstream, although Trump's doing a really nice job making himself look mainstream.
Yeah.
But I mean, it's again the fact that we're even talking about the politics part is the sad part, because when you talk about the reasons why you own precious metals, or the reasons why Bitcoin is hitting an all-time high. Yeah. It's because of the monetary and financial collapse that's going on around the world as I watch. And again, I said in the beginning of this call, I will put my economic prediction track record, I'll put it back to 20 years ago. I remember I was calling for that crash in the dot-com. I had no money at the time, but whatever I did have, I sold, and I held it all the way and, through the whole crash, and didn't get back into markets until I put it all in precious metals in 2002. So back then I saw that. I wouldn't buy a house going into the real estate crash because I knew it was coming. And, you look at what's going on in the world right now. I saw all this coming, and I've written. I probably forget the content or the quality of what I said. I put out more quantity than anyone. I put up 1,000 articles in the last 5 years, like 1,000 articles in all the podcasts, and it's all documented that the things I've been talking about are happening, and they're happening right now. And I'm telling everyone, the global economy is at its singular worst point that it's ever been in our lifetimes, unless you're like 100 years old and we're around for the Depression. But of course, back then they had a gold standard, so there was really not much debt in the world, and it was a lot easier to get out of that and get back on your feet. This time around, the problem is going to be that we have to default on everything because of all the debt. We and everyone else, and whether it's due to hyperinflation, which is what banks always choose, or the regular default, like the countries that can't, like a Puerto Rico, which doesn't have its own ability, or Greece to print its own money and get itself out of these messes. It's going to happen, and it's been happening. That's why, you go back to the financial crisis. The average currency has lost half its purchasing power. Half. Yeah. Some have lost much more. BRICS, these great BRICS, the Goldman Sachs that would rule the world, South Africa, and Russia. I mean, they've lost way more than 50% of the purchasing power since the financial crisis. And yet, we're in this crazy, I don't even want to call it, I wrote yesterday about the biggest bubbles ever, because I'm reluctant to even call them bubbles, because there's been, until very, very recently, no public participation. It's 100% the government printing money and buying markets. And that how do you think the Japanese get a $4.5 trillion balance sheet in such a tiny economy? They're buying the stocks. They're buying the stocks and bonds. And of course, the Fed is buying the bonds. I've been writing about the dead ringer algorithm of the Dow Jones propaganda average for 5 years. Every day, the Dow bottoms at 10 o'clock a.m. Eastern Standard Time, which is when the Fed does its open market operations. So who do you think's buying all the stocks? It's not investors. Heck, recently, we've seen massive institutional outflows. It's only recently that the retail has come in because, of course, they come in at the top. I mean, it's a guarantee. It's kind of like, in the COMEX. As long as the COMEX exists, you had a record high speculative long position, as you should have, because of all that's going on in the world, and a record high commercial short position, because that's the government with their deep pocket and not deep, endless, infinite pockets of printed money to make sure that, last year alone, paper trading on the COMEX and LBMA increased 50% for gold and silver because of record demand of people who are too stupid to realize that if you want to own gold and silver, you buy actual gold and silver, not limitless amounts of futures contracts that can be offset by shorts. And even this year, last year's increase of 50% in paper has gone up dramatically, which is why you have an all-time high silver short position without even having a visible crisis. And of course, what's going on now with your 13 days in a row of declines is that all-time high speculative long position is being unwound. The cartel shorted and shorted and shorted until eventually the buying power of the limited pockets on the long side runs out, and then it's easy. They have to keep selling to margin call day after day. The problem is what that creates is more physical shortages as the mining industry falls apart, and the smart money comes in and buys the physical and the cheap, like in China. I mean, China, we just had, I think I saw a doubling of the imports of gold into China in the first quarter from a year ago. And you look at a Barrick's earnings report the other day. The stock's down 15% since. Because of it, because the mining industry, I've said it for years. Go back to my article in early 2015. I wrote my early mining earnings guarantee peak gold, and I was right. Gold plunged. Gold's now expected to fall. Can you imagine? I mean, I'm reading this morning about copper plunging, the massive copper bubble, and I'm talking about how copper could have gone from $2, which was its post 2008 low, up to $2.60 or $2.6. I think it got to $2.75 with absolutely nothing going on. Construction activity collapsing the worldwide because of this ridiculous Trumpflation meme. And then I read this morning as base metals are finally starting to collapse as they should into oblivion. Record high copper inventories. Okay, and yet inventories of silver are at a record low. And inventories of gold, and the production of gold and silver is plunging, while the production of copper is surging. Gee, I wonder what's going to happen to prices. I wonder how much longer this fake. It's not even past the Trumpflation part. Everyone knows there's no such thing as Trumpflation. I can't wait to see what the Fed says today when they are more dovish than usual. In fact, I'll bet you that's the thing that turns around this ridiculous precious metal decline, because there's nothing they can say anymore. This whole concept of raising rates into the worst economic data ever in our lifetimes. I mean, again, except for a few weeks in 2008 and post 9/11. This is the worst ever, and it's getting worse on all fronts. There's no hope that it's going to turn around. Certainly not because of central banks doing anything. They've already used all their ammunition. So we're done with Trumpflation. Now we're simply at central banks spending all day long buying stocks and selling gold, paper gold, and we're at the point where the biggest bubble in history, entirely central bank created, has been built, and the biggest anti-bubble in precious metals is here. I mean, you talk about what's the downside for gold. There's no downside. What, $50? There's no downside. There's no mining industry anymore. Any more downside. It's like, this idiot Harry Dent. Well, gold's going to go to $700. He's been saying that for 15 years, okay? Because he sells books that way.
Yeah.
At $700 gold, okay, I would venture to say that 80% of the global mining industry, gold and silver, would be shut off at a time where we already have this plunge in supply. And I guarantee you, if prices were that low, it would be because the whole world is falling apart, okay? Yeah. So there's no downside. Material downside. I'm not talking about like small percentages. None. I'll sit here. I mean, this is the best buying opportunity for physical precious metals ever. And if you want to see what's going to happen to precious metals, then just watch what's happened to Bitcoin, because Bitcoin is obviously it's a different world, but it's a non-manipulated. It's one of the only non-manipulated markets out there. Yes, governments try to jawbone it. They create capital controls to make it more difficult. But as I've been writing in my countless I wrote the future of money and wealth storage article the other day, and the Bitcoin and precious metals twin destroys the fiat regime. I did my audio blog earlier this week, and many others. All the governments, they're like Don Quixote flailing at Bitcoin. They just you can't. It's decentralized, so they don't know what to do with it. They don't know how to stop it. And what they're going to realize quickly as this global economic collapse explodes on them is that people will never ever trust a government of any kind anywhere to ever issue money again. There's no gold standard. That's ridiculous. That means you have to trust governments that have destroyed every gold standard, just like they've destroyed every fiat regime by fraud. They steal the gold. They encumber the gold. They lie about the gold. And then they just renege on it. FDR says one day, I'm taking the gold back. Or Nixon says, guess what? France can't have any gold. In fact, no one can have any gold. So there's not going to be a gold standard. There's not going to be any SDRs. Jim Rickards is absolutely ridiculous. This is the stupidest thing I've ever heard. Okay? Jim Rickards, the stupidest thing I've ever heard in my life is the SDR. It will never happen. There's not going to be a currency based on all the other crappy currencies of a bunch of countries and central banks that have no credibility at all, that people hate. And by the way, they all hate each other. And by the way, China isn't even going to be, you think China could care less what the Western countries have? They're the ones that have the gold. And they probably have all the Bitcoin too by that time. So no, the future of money is going to be decentralized. The future of wealth storage is not going to be in residential or even multifamily real estate. It's certainly not going to be in stocks that are valued at .com levels during the Great Depression era. And it's certainly not going to be in bonds that are trading at the lowest levels of interest rates in 5,000 years, with the highest levels of inflation and the most government and all around debt in the history of mankind, multiplied by 1,000 times from the second highest time. So again, people, it is all going to be hitting the fan soon. There is absolutely no way that we escape this. And frankly, the French people, you want to end this misery for the whole world? You want to move on with your lives? You want to help the world? Then don't vote for this little idiot. You want to drive a Brexit times 100 stake into the world's heart? Vote for Marine Le Pen on Sunday so we can move on and get to that next stage of the world where something actually good might happen for the 99%.